Hello and welcome to Options Guy TV, and welcome to our new series called Fundamental Friday. Well, today we're going to continue with our theme of last week of using options as protection. We're in the heart of earnings season, and one of the top holdings at Tradier is Apple stock, symbol AAPL. We looked at buying a protective put on Apple as we head into their company's earnings report, which is going to be on the 30th, which is a Thursday, and they announce after the close. Now, when we talk about this on Fundamental Friday, we're going to walk through the steps of actually executing the trade in the paper trading platform at Tradier.com. Everybody can follow along. If you open up a paper trading account or open up an account with Tradier, the exact two platforms that are available through Tradier are available to you. You have the Tradier Pro platform if you sign up for the more advanced platform, and there is a paper trading app there. And I use that during my normal show on Options Guy TV. And today we're going to focus on Tradier.com, which is a very straightforward platform, and it's great for learning the fundamentals of options, and also open up an account, you start trading. That would be available to you, and it looks exactly like the platform that you would use to trade. Okay, so in a second here, I'm going to show you Tradier.com. And we're going to walk through a covered call on Apple. Now, last week we went in and we bought the underlying stock and we bought a protective put. That put allowed us to put stock to somebody at the strike price. And that was pure insurance. In other words, no matter if Apple went down to $5 a share, we could grab it at $5 and we could put it to somebody at the strike price of the put option. Now, to go along with that, I'm going to look at selling a call against Apple going into earnings. Now, not all these trades have to be done because of this major event, but the fact that the companies are announcing earnings, and sometimes people want to look for protection around this big event, is an opportunity to address it during Fundamental Friday. So also, I'm looking at strategies that enhance a stock portfolio. We're not starting out by buying a long call to speculate that Apple's going to have a good earnings report, right? And a lot of beginning option traders, in my mind, make the mistake of using options more as a tool of leverage than a tool to enhance your portfolio or, protect you when you're nervous. And I went over a lot last Friday about the fact that if you buy a put on a stock that you own, you still want the stock to go up. You're insuring it against the downside, but ideally, you would be more beneficial if the stock went up because you still own the stock. You didn't sell the stock. So if the stock goes up 30% and you lose 4% because of the option premium on the put, well, you're a winner. You're a net winner on that trade. All right. So this week, we're going to give you we're still going to take that same approach. We're going to sell a call and we're going to bring in some premium. And I'm going to talk about volatility, and I'm going to talk about some of, the headaches of doing it around earnings. There's always good news and bad news. And so we're going to talk about the good news of the high volatility. We're going to talk about the bad news. But we have a known event. We have an earnings event. We know most likely that the stock is going to move more than it normally does because of this earnings report. All right. So let's get into the trade. We have 100 shares of Apple already in the account. We already have the protected put. And once again, you open up the account, you can actually put these positions on, and you can follow along every Fundamental Friday, and you can ask questions along the way. So get your chat box open up. If you have any questions during the show, I'll be happy to try to address them. All right, so let's show right now. Let's pop over to Tradier.com, and we're seeing Apple right now trading at $271.15. It's down $2.28 on the day. Here is the chain, and we just literally click on chains. Like I said, a very straightforward platform at Tradier.com, and we type in the symbol Apple. When that comes up, it gives you some information on the stock, and if we scroll down, we have 3 different chains that are available. You have calls, you have both calls and puts, and then you have puts. We focused on puts last week. This week, we're going to focus on call options. And we know that they're announcing earnings on the 30th. And right now, today is the 24th. So it's Friday the 24th. Next week, Thursday, we're going to have our call option position on. They're going to announce earnings, and then we're going to have Fundamental Friday. They announce that on a Thursday after the close. So we'll be able to address both of our positions after the earnings announcement. All right. So if I run into the account, we're going to come back and look at the chain. We're going to place that trade. But if I come back and I look at the account, we're going to walk through what position that I have. All right, 1 second. I got to hit pause. 1 second. 1 second. So sorry about that. Somebody just started up an engine and my window was open. Here we go. And so if I go and I look at this account, we have our activity right here. Oh, 1 second here. That's what's going on. And here's our Apple position, and here's our protected put. So we have our 100 shares at 271.85, and we have the one Apple put to stop the bleeding anywhere below $265. So the stock is at $272. The strike on the put is $265. Now we're going to sell that call option, and we're going to keep our put option in here. This effectively creates a trade that's called a collar, and we'll get into the details of that collar later. But by selling this call, we're going to bring in some premium and actually pay for the put that we put on last week's show. We actually bring in some income. We still own Apple. We still have upside up until the strike. We also have the known and limited and known downside of the position. But this is our Fundamental Friday position that we put on in Apple. All right. So let's go to the chains and type in underlying AAPL. And now we're back to our chains. We're in this scenario, we're going to go out a little bit in time. We're going to go out about 30 days on our call option that we sold. So here is the drop down in order to see the different expirations that are available and the days to expiration, which is very important. So I really like the format that Tradier has here. We actually have the expiration date and instead of trying to put the month in, we just actually have that day because there's so many different expirations that are available in this day and age. And we go down, when we looked at the trade last week, we were at about, we did the May 15th expiration, and it was a little bit closer to 30 days. So now we're going to look at the 21 day, and we're going to use the same expiration that we did on the put, just to try to keep everything pretty uniform. And so then we look at the calls, and we are going to target a decent premium, I guess is a good way to say it, on the upside. And we're going to get a lot of premium because of this known event. Implied volatilities are going to be fairly high. And because of that, we're going to receive a good amount of premium for selling the call. And that premium can be used either by the put or offset the cost basis on the stock. So with the stock at 271, if I go up and look at the 290 strike, the last trade was $1.68. The bid is 160, so that's the sell price. If we go in and actually sell this call option, we sell it at 160, and then the buy price would be $1.66. 160, 166, and that would be what we receive for just saying we'll sell Apple stock if after the earnings it's above 290. So in this instance, we're just going to hit the bid, and I just click sell, and then I'm going to send that to the ticket. So once I do that, it pops up down below. We see we got an option on Apple. We got the May 15th expiration. We got the 90 strike call option, and we're going to sell one of those. Now, I never, when trading options, I don't like to place them at market. Apple's very liquid. Markets are fairly tight in the options world, but they're never as tight as they are in the stock. The stock is just one stock. In the options, you have a plethora of different option contracts. And the fact that there's only one Apple stock that you can trade makes that way more liquid than the options, and you get just tighter markets. So even if I want to get it filled, and we talked about the bid and ask, I'm still going to hit a limit. And I'm going to enter this as a limit order. And Trader then gives you the prices. You got 160, 162, 164. You can work the order, and by working the order means that we're looking to send it at the midpoint of $1 and, well, in this instance, 61 cents. It's only a couple of pennies, and we're on the show, and I want to execute the trade right away. So I'm going to, the way the vernacular of the marketplace is, I'm going to hit the bid. I'm going to select right where the bid is at, and I'm going to send it down to the trading floor trying to hit that bid. And that market's moved. You know, we've already lost a couple of pennies because I'm long-winded here. But I'm going to try to sell this at 156, good for the day. Now, by placing the limit order, I'm saying I've got to get 156. If I can't get 156, then I don't want to execute this trade. And that is the way I look at the trade overall. If I can't get 156, don't execute. The market would have to come back. Something good would have to happen on the trade if we did that. So here in this instance, I'm going to hit submit, and I'm going to send this down to the trading floor, or the paper trading floor, if you will. And boom, boom goes the dynamite. Trade has been sent. And you see that little pop-up. It popped up here over in the corner. And we should get a fill fairly quick on that. Obviously, the market is moving at this point in time. So I'm going to go back to the dashboard. We're going to take a look at it. And here is our order. We're selling one at 156. Status is still open. And once we have this position in, here's where our risk is at. And here's our upside and our downside. We have the stock right now at 271. From 271 down to 265. That is our deductible on our trade. That is our risk on our trade. On the upside, if the market goes all the way up, we participate because we own the stock from 271 right now all the way up to 290. We're saying we will give up our stock at $290, our 100 shares. For saying that, we're going to, and we did get filled, and showing our order status right now, we're going to get $157 for the next, I think it was 21 days, or maybe it was 22 days. We take on that obligation to give up our stock at that price. And now we have a limited and known position on Apple going into earnings. We know the downside, we know the upside, we still own the underlying stock. Now, we can go in and happily do this trade. We can put this trade on without we don't have to do each leg of the trade, right? We're enhancing our stock portfolio. So last week we just did the protected put. If we're truly bullish on Apple, there's nothing wrong with that. Just buy the put, gives you that protection during earnings, and then you have the still unlimited upside on the stock because you didn't sell it because you were nervous. And now we've sold a call. So we could just sell the call if we wanted to and bring in that income. We're going to give up an opportunity on the upside. If the market goes above 290, we don't participate anymore in that position. But up till 290, we get all the upside from 271 to 290. That is the possible appreciation that we can make on the underlying stock. We combine both of them. We make the insurance a little cheaper because we brought in some income from the call to pay for the call. And we still own the stock. So once again, it's all about owning the stock. And I do believe that On Fundamental Fridays, I believe that beginning option traders should focus on their stock positions, because very rarely do option traders just come in and don't own stock. They've never owned any stock before. They just start trading options. Times have changed a little bit, but back in the day when I worked at the Chicago Board Option Exchange, now called the CBOE, when I used to work there, a lot of research was done, and almost 80% of people that ever traded an option owned a stock before they started trading the option. They did the research on it, figured it all out. I'd say there's a little bit more people that just jump right into option trading. But with that said, I like to focus on using options to enhance your portfolio of stocks to start with. Eventually, after the earnings report, guess what? We might just buy a call in Apple. And it's not, once again, not meant to be a recommendation on Apple. It's a stock that a lot of people own. So I'm going to focus on a little bit as we build out the fundamentals of option trading. All right. Down below, there's a link. You click on it. It will take you to a landing page. On that landing page, if you sign up, we will send you the fundamental videos on options. You fill out an account, you get set up for the paper trading so you can follow along with me, and then we will send you a series of 4 videos that I did specifically for Tradier, specifically for Fundamental Fridays, that set up and get you ready to be able to paper trade right along with me every Friday and ask me live questions during the show. So thanks for tuning in. We'll see you next Fundamental Friday after Apple's earnings report. And more than likely, we'll start addressing buying a call option as a surrogate for owning the stock. How can we use options instead of buying 100 shares of Apple outright and paying all that capital? How can we use options to get something that gives you the type of movement that you would get in the underlying stock? We'll just leave that cliffhanger right there. So thanks for tuning in. On Monday, we'll be back for the next edition of Options Guide TV to look at more trades around earnings, and then come back for Fundamental Friday, and we'll address Apple after their earnings report. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.